The last time we chatted, we talked about the Nasdaq. So we talked about the potential run. We talked about potentially taking this trade as a double bottom here. And anyone that took that as a double bottom, well done. We've had 1, 2, 3, 4, and then today. Absolutely. I agree with you, Gary. So we've had a really big run. Now we've broken this sort of ceiling. Okay, we obliterated that ceiling there the other day, so which was really, really nice to see. So did we get the Santa rally? I suppose this could go down as sort of the Santa rally. So the 20th of December from that low upwards, and it hasn't quite made a higher high yet, but if it continues in the zone, you would expect it to make that higher high. And so we didn't get the traditional one that went on for a month or two, but let's see how this goes. But it's quite bullish. It's exactly what we wanted to see, and some people have taken that trade, some people didn't. Whoop. So what we want to see happening now is this. A comeback and then retest. Now there's a couple of little scenarios going to happen there, okay? So we have a double top there, don't we? Hasn't quite hit it yet. We'd expect that to hit it today. So if that goes up like this, are we expecting a sell-off when it hits its head here? Or are we expecting this to continue going? What's the general consensus across the board? Are we expecting to hit its head and drop, or would you expect it to smash through that and continue running? What's everyone's thoughts on this particular scenario? What's the general consensus across the board? So I have sell off, drop, and the drop, but the market is mad, so it may go up. Well, look, looking at what we have here, we look at this structure. We had this massive sideways movement. We had this consolidation. It's come back and hit this double bottom. And since that double bottom, we've had a little bit of certainty, haven't we? We've had a buying day, second buying day, a third buying day, a fourth buying day, and then whatever today finishes. Okay, so depending on how today finishes, I would probably expect it to make a higher high. Looking at what's going on here, we now have momentum to the upside. So if you're a seller in the market, so you're expecting the market to drop, okay, you're looking at the market to drop. Would you be massively bearish at this particular point, looking at what's happened in the last week? Or would you rather see a setup like this? Or would you rather see a setup like we have here? Like that there. A doji, a high test, a small bullish bar, a bullish bar, sort of a low test bar. What would you call that as well? Just a bearish bar, then an inside bar, okay? Wouldn't that what you'd be looking for us to have a sell at that particular point, wouldn't you? That would be the ideal scenario. We'd have some sort of consolidation happening up here at this particular point. So is this a point to sell at the moment? Not for me, because looking at these bars, we have an awful lot of buying power in the market here. Now, the same could be said here on this bar. This one here, look, we have a big, huge bar here. Big, huge bar, and it hit its head once, hit its head twice, and all of a sudden then it completely changed direction there. Okay, so we're not saying that there's no possibility of that turning around, but looking at the structure, looking at the momentum, to me, it looks like that this is going to continue. Now, how far? No idea. For how long? Again, no idea, but I would expect to make a higher high. So how much higher? Again, I have no idea, but I would expect that to continue going. And that's what I would expect to happen there. But if it comes back down to here, there is a potential buy at that particular point. It'll be a really nice area for us to actually jump in and actually look to buy the market. If it went up a little bit higher, come back down, that would be the perfect scenario to get in on. So we'd expect this to continue going. Now, once we look at the other indices, we have a look at the S&P. What do you mean by TPSs? What do you mean by TPSs? Take profits. But again, Shane, I was just looking at a stat across the board. Does anyone know what percentage of CFDs are say, we'll just take the UK 100, because I don't specifically know the stats for the FTSE or the Nasdaq, the S&P, and that. But just say the UK 100. Let's pull up the UK 100 here. What percentage of trades in the UK 100 are CFDs? Okay, Gary's gone big, 90%. Shane said most of them. Is anyone on the opposite side of the fence? No idea. Right, so CFDs only account for 25% of the UK 100. Now there are certain days of the year and the month and the week and stuff like that there that it can go up to 50%. So as a general rule, when people are trading the likes of the indices and stocks, we're generally trading the underlying asset, aren't we? We're generally trading the underlying asset. So which means then that there's always more momentum to the upside than there is to the downside. So then theoretically, once there's a bit of momentum behind it, that's why these runs continue for so long once momentum takes off. Now, if we look at the UK 100, it's been sort of pretty flat over the last couple of years. Been pretty flat over the last couple of years, and that's that market. It's been pretty flat. Now, if we jump over here to the Nasdaq, which has been going in an upward direction since the day it opened, theoretically, you would expect to even have less CFDs on this. Okay, so just say there's 25% CFDs on the market. Now, looking at the likes of this market, what percentage of those CFDs will be long? You'd expect the majority of them, wouldn't you? Remember, a CFD, you can go both ways. You'd expect the majority of them. But even just say half of them are long, half of them are south, which means then theoretically there's only 12.5% of the market being shorted. Okay, so that's just a little bit of a food for thought for you guys. Okay, so there's a bigger percentage buying the market, underlying, going with the trend than there is going against it. Now, obviously, those stats change and vary with each individual market. Now, the one I saw and the one I read was the UK 100, and that was the test that was done on. So we're assuming that all is equal in the world, and that the other indexes will probably follow similar suits, but they may not. But the idea of this is an overall trend going up. The momentum is here. And at the minute, I would expect that to continue going. Same with the likes of the S&P, okay? For the S&P here. So, all right, so just to go back to answer that question. So will you have people taking profit there? Yes, to a certain degree. But then you have the other side of it. Anyone who took profit at any of these highs, aren't you annoyed now that you took profit at any of those highs? Just say you jumped in here and you took profit just inside this high, this one here. Aren't you massively annoyed now because the market's up here? If you jumped in here and you took profit there, you'd be massively annoyed because it ran up to there before it had a phase two. But if you stayed onto it, here's where it is now. So the idea of the likes of these markets is wait for a drop. And then when you have a drop, buy it up and hold on to it. Hold on to it for a year. So that's the idea. Now, something that I know I spoke of loads of times is that generally mid-January to mid-February, we have some sort of a pullback in the market. We generally get some sort of a pullback in the market. We may have had it already, but I very much doubt it. So that's where I'll do a webinar in January about it, about rebalancing your books, about how to actually minimize that downside if you expect it to come, and that'll be something I'll probably do on Wednesday. But with the likes of the S&P here, S&P has been the best performing one. Okay, so it just tells us here that, so if we look at the Nasdaq, we have tech that's now almost at a record high. But if we look at the S&P was at a record high yesterday. So what that tells us is that stuff outside of tech has done extremely well in the last 7 or 8 days. So stuff outside of tech. So what I would suggest is have a look at the indices, or not the indices, the industries, and work out which one of them are actually done well. So you can go to stock screener down here in the bottom. Look, stock screener, pull that up. Pop that up. Go to your filter here. Okay. Index, so you can pick your index that you want. And then you can go to sector. And you can check which of these sectors have done extremely well. Okay, they're all the sectors. Finance, health, technology, retail, okay, transport, utilities. You can figure out which one has done extremely well and which one hasn't. And then, is that something that is going to continue, in your opinion? And if it's going to continue, then that could be something that you're investing in. Because tech has gone on. Tech has boomed. Will it continue to boom? Probably. But as there looks like there's a different sector that's doing much better than tech at this present moment. So we have this has taken off. It's now had a higher high, whereas it's usually Nasdaq that's making the higher highs, and then the S&P is following. Whereas this one, the S&P is taken off, and now the Nasdaq will probably follow. But for us to take a trade on this, we now want this to break and retest, don't we? We want this to break and retest. We want this to go up, and then come back down into this area here. It comes back into this area. That's what we're looking at. Want it to come back down there. Now, the thing with this is that it may have just one bar pullback and then take off. So we may have to drop down to the 4 hour to take this if we're looking to buy it. Or you could be someone who is, well, Henry, I don't really want to mess up my end of year results. You could be up handsomely this year. you may only be marginally up. So which means if you're only up marginally, then you stay away from the market and you wait till January the 1st to start trading again. If you're happy with your year's results, then you leave it alone. And you don't jump into trades like this. And then we will look at the Dow. So we can see the Dow, it looks like banking has sort of, finances have generally took off over the last couple of days. We'll have a look. But it looks like this is going to make a higher high now very, very shortly. Anyone that took this trade down here is doing extremely well. Okay, would expect it to hit there probably by the middle of the month. So remember, back here, all doom and gloom. All of a sudden, people are all now happy again. But do you see how emotion jumps in and actually stops people from making money when trading? Who was it said to me here on one of the webinars going, but Henry, every person on YouTube is talking about a market crash. Well, the market has now made a higher high. Market has now made a higher high. Look, it may crash. It absolutely may. But historically, any pullback or any phase two that we have is generally mid-January. Once the Fed start taking their money out of the market properly and it's out of there, we may have some sort of a pullback. But remember, as long as the Fed keeps everyone up to date and tells everyone what they're doing, the market should continue in the same vein. It's when something happens that people think is unexpected. So if all of a sudden the Fed come out and they're talking about the quantitative easing and they're saying that we're going to, instead of doing the normal quantitative easing, cutting back, we're actually going to double the cutback. So we're going to cut back twice as much in this month. Then all of a sudden the market has a knee-jerk reaction to the downside. But if they cut back exactly what they said they would, at the same time they would, and the same amount, I would expect the market to continue running. Again, if coronavirus kicks in and we all go into another lockdown and all that sort of stuff, yes, again, it will massively hit the travel companies. But it's one of these things that we now know how to make money out of this. We now know how to manipulate this. We now have an idea of how psychology reacts to the market here. So don't ever get caught up in hype. Don't ever get caught up in hype. Yes, we will have a correction. And it depends on when, but the idea is the market is pretty cyclical. It follows a pattern. And if you set up for taking profit in the patterns in these cycles, you will generally do very well. With your long-term stocks, just hold on to them. Just hold on to them. What you can do is rebalance the stocks that are not doing very well, rebalance, get out of those, and then try your hand and jump in other ones. Okay, so that's something that we could be doing. Now, if we look at the likes of the German DAX, again, we've now had this nice bullish run over the last 4 or 5 days. Again, same on the UK 100. We're not at a record high, are we? Nope. But we're starting to get close. We're starting to get close again. So up here is our record high. That's the record high So we're starting to edge up towards that. We're starting to get closer and closer to that. If you're someone who thinks we're going to hit that, look for a position to get in on it. Look for a position to get in. Now the problem is that this is going to be very slow. This is going to be very slow. There's probably much more upside on the likes of Nasdaq, S&P, and the Dow than the likes of this. But it's a nice slow burner. The French CAC, that's almost at a record high here. It's much better than the likes of the UK 100. We're almost at a double top. Same with the German DAX there, almost at a double top. Once it gets up there again in a couple of days. And in China. So anyone who actually saw Sunday's webinar, I don't know how many people did or how many people didn't because of the glitch, but I actually talked about taking this trade long here. We talked about taking this trade here long. So we had this short position. So we had this short position coming down. And what we did is we opened a position long. Now, when we have a position short and then a position long, that's called gearing. Okay, it's not called hedging. Hedging is when you're on two different assets. This is called gearing. So what happens is we have a position here, we're heading down, and we wanted to hit the take profit here. But I have this double top. Let's come down and hit it. Now, when I look at this, I have an inside bar. I have a low test bar. I then have a second low test bar. I'm going to move this out of the way. I'm going to move this out of the way so you guys can actually see it properly. So we have a selling day with a big wick. Then we have a sort of an inside bar. We call it a doji bar, but an inside bar. Then we have a low test bar. And then again, we have another sort of low test bar. Now, if we look at the three of those there, what is this wick and these three bars telling us here? What are they trying to tell us? What are those three bars trying to tell us there? What are those three bars there trying to tell us? Well, it's telling us that the sellers and the buyers are having an argument. It's telling us that there is some sort of pressure to the upside there because the sellers have now completely jumped out of the market at this point. And it's not only one day. We've had 1, 2, 3, 4 days of it. Now, if I was a seller and I was in this market and I saw all these bars here, I would be taking profit. I'd be jumping out of the market at that particular point. Under no circumstances would I continue with my short trade. Under no circumstances. So this trade that we had here, about there, I would now be taking profit. I would now be closing that trade somewhere around there. So see what the open and the close of that bar is, down a fraction lower. About there, which meant that I risked 3.3%. I took 2.4 out of it. So I risked 1% and I took about 0.8% out of it, which means I would now be jumping out of this market. If I was looking to short it, I'd be looking to jump out of this and I would remove that trade. And then on the webinar, I talked about jumping in on that bar there. So my stop loss below this, entry there. And at the minute, we're looking quite bullish on this. Again, I have no idea what upside is on this, but we would expect it would expect it to probably pop back up in around close to this level. Close to this level. Now, when we look at the structure of the market here, what is the structure here telling us? This whole structure, this whole box, this whole thing here. You guys have been trading a little while. Some people are very new to this market. So what is this whole structure here telling us? In your opinion, what's that telling us? Someone said ranging. All right, David, it needs to be a little more specific. Are they going to break through? I need a little bit more as well. I need to break through what? Satnam, entering an upward trend. Okay. David, a trend reversal. Good. This here looks like we are potentially going to change direction. Now, just to reiterate, we're not always correct, because we had similar here, didn't we? So we had this triple bottom here, and then look, we had this bullish momentum. It popped down here and went up and then broke down. Okay, so we can't always guarantee that that's going to take off. We can't always guarantee that's going to take off. But what we're having here is a bottom, second bottom, third bottom. And now look, it's a higher low. Then we have a floor. It's gone up. We've had a floor. It's gone up. It's hit a floor. Now it's taken off again. So we're having these floors are slightly getting higher. Then we have a phase two, and what was the ceiling there is now the floor. Now I don't know whether it's going to go back up, come back down, go back up, come back down, and then break here, and then come back down, back up, back down. But that's what we're slowly having at the minute. We're having these very low, very slightly going up. And this will be the scenario here. And then all of a sudden, we will get that. That will happen. We'll get a breakout. So if you look here, we had a breakout right there. The same will happen to the upside at some particular stage. Now, whether it's going to happen when we're here in the market or not, I don't know. Is this the best place to get into the market again? Again, it's something that we're bullish on this, and we're just trying to find levels. We're trying to find the floors on it. So the idea is to see the market structure is changing very, very slowly, very, very gingerly. Okay. Now there are some key things that are stopping or making this turn or preventing it from popping to the upside. One is evergreen. Okay, they defaulted. Okay, looks like they're either going to go under or the government are going to bail them out. It's literally they're the two scenarios they have over there. Neither of them are good scenarios. Second thing that's happening over there is you have the delisting of the stocks from the Nasdaq. That's the second thing. Now, will both of those things eventually get sorted out? In your opinion, yes or no? Batman, yes, absolutely. David, yes, I think so. Eventually, yes, they will. And the question here is, do we trade CFDs in the likes of these areas? Or do we just buy up some Chinese stock and just let it slowly grow? Which one would be the more likely to come to fruition? The underlying asset or the CFD? Better to go for the underlying asset, but I prefer CFDs. Ava, like most of us here prefer CFDs. But the idea is that if you want to make money on these, buy the underlying asset. Buy the underlying asset, buy up some Chinese stocks, whether it's the index, whether it's you going into the stock market and buying some of the underlying assets that you think are undervalued, just buy some of them up. Okay? And sit and wait. And sit and wait. Now with CFD trading, we're probably not there yet. I'm not at that particular point yet that I'm happy to start CFDs trading this. I can see the trades, pop them up, but we have to be very aggressive with our entries, our exits, our take profits on the likes of this. So I'm not happy to be trading the CFDs on it yet, but eventually I will. Once I'm happy with the trend that it's starting to move in an upward direction, because once it starts moving in an upward direction, this market trends very well. It's the same as the Nasdaq, the same as the S&P, the same as the Dow. It trends very, very well. And when it takes off, it literally takes off. And we can see it here. Look, started trending, took off, sideways, started trending, and look, that was in the space of a year with huge growth. Sideways, and then we'll eventually get some growth to the upside again. Absolutely. I have Shane just said I have plenty of Chinese stocks already. If I sit and wait and sit out, and if there's any CFD opportunities, then I take them. Perfect. That's the idea. We don't have to go and trade everything all the time. Okay, we don't have to trade everything all the time. There are points where we just sit on our hands and let the market sort itself out, and then we cherry pick what trades we're looking to take. We cherry pick what we're looking to take, and that's the idea with CFD trades. I'm not someone here that's smashing CFD trades out of it. I'm looking for cherry pick. I'm looking for the creme de la creme. I'm looking for stuff that is jumping out of us, stuff that is easy to predict. Now, oil has had a little bit of a jump to the upside, which I wasn't massively expecting. So it wasn't something that I was hugely expecting. But look, we're after having a pretty big jump to the upside. I was expecting a little more downside on the likes of this. So I'll remove. And I wanted it to go up, hit its head, and then come back down. Now, it didn't quite hit its head there. So if we move this out of the way, now I wanted to go up, hit its head, come back down. I moved that out of the way, and it didn't do that. It went up slightly, then come back down, and then continued to smash through it. So it didn't give us what we were looking for. Okay, so again, we now have a horizontal level there. It's hit its head once, hit the floor, bounced, hit the floor, bounced. So we will now, this is how quickly we change to the upside on like this. Why? Because we now have phase one, phase two, phase one. So this here is a low. Okay, if I get this, that there is a high, higher low. Okay, so we're always looking for two clear cycles. And there's one cycle. And if this pulls back, that'll be two cycles. This one here is a low. This one here is a high. This one here is a low. But when I compare it to that one, it's a higher low. back up here. This is a high. And when I compare that, oh, sorry, this is a high here. And when I compare it to that one, it's a higher high. And all I'm waiting for now is this phase two, whether it comes back here, or whether it goes up a little further, then comes back here, or up a little bit higher, and then comes back here. As long as it comes back in this area, I'm then bullish on this. I'm now looking to buy. This line is our buy line. Now, it may not come to fruition. It may not work out. But it's bounced here once. It's bounced twice. It's bounced 3 times. So if I get a pullback into this level, we're looking to take off to the upside. It may even come back down to this one, yes. It may come back down to this one. Okay, it may come down to this one, whereas 1, 2, 3. It may come down there either. But there's our plan A. Then we have our plan B. Now, price action is really, really important at this point. Why is price action so important at this point? Why is price action so important? Now, to give you an understanding what price action is, anyone who doesn't know what price action is the bar. What journey is this bar telling me? What is this bar telling me? That bar there, if it's red, okay, so it's a red bar, it's telling me there's more sellers in the market than buyers. So that is a bearish day. So if I have my horizontal level here, and I have a bearish day, is this the type of price action I want? Go back up. Yes or no? That the type of price action I want for it to go back up? Absolutely not. Absolutely not. So if I get a price action bar like this, a doji bar, is this the kind of bar? Okay, so what happened in this bar is the sellers pushed it down. Okay, sorry, the buyers pushed it up to the high. So it opens here, went up. Then the sellers pushed it down, the floor here. And then the buyers pushed it back up to here. And that's the scenario with a doji bar, okay? That's the scenario with a doji bar. So it went up, it went down, and then it went up. And that's the doji bar. And then the middle here is the bar, is the body. Okay, that's how a doji bar is formed. So is this a bar here? Is that a bar here to tell us? Is that a bar to tell us that the buyers are about to jump in? So someone said no, there's indecision. Someone said yes. Well, this is one of the bars that we want. We want indecision because at this particular point, there was a phase 2 coming down, isn't there? Phase 2 coming down. So remember I said I want a phase 2 coming down here. So I want that bar coming down. I want another bar coming down. And then if we have this doji bar right there, so that's what I'm trying to play out. What's happening right on this line. So we have 1, 2, 3 bars coming down. So if I have that doji bar there coming down and hitting that area, that's exactly what I want. I want them that there. Why? Because that bar represents indecision. So the sellers tried to push it down, but then the buyers, when it hit the floor, pushed it back up. There's an argument going on between the buyers and sellers. So this one is a no. That is not a bar that we want at that particular point. This one is a yes. But is this the perfect bar? Is this the perfect bar? Yes or no? Is this the perfect scenario? The answer is no. This is not the perfect bar. And then the last price action bar we want to see there is this. Now, how this bar is formed is it opens here, sellers pushed it down, and then the buyers pushed it back up. And the bar finished up here. So in this particular scenario, where do we think this bar is going to go? We're expecting it to go up, aren't we? Expecting it to go up because the sellers pushed it down and hit the floor. And someone said earlier on about people taking profit. So when this happens and we see this price action bar, as a seller on this horizontal level, because I can see the levels here, when price action comes down, me personally, I'd be looking to jump out. Remember the example I gave you on the likes of the China 50? We had the bar with the big wick, then I had an inside bar, then I had a low test bar. Now for me, this is called a low test bar. So it came down, it tested the floor and went back up. This could be called a hammer. I think sometimes if you're talking about candlesticks, it's called a Twizzler or something like that. It has 5 or 6 different names. But literally what this means is sellers push it down. Then at this point, the buyers push it back up. So my entry at this particular point would be slightly above that bar. My stop loss would be below it. And is this the ideal bar? Yes, it is. But this is also an indecision bar. So these two bars work, and these two bars are indecision. This one doesn't work. This is a decision bar. And the decision is this is going down. All right. So we want a little bit of an argument at that particular point. Okay, so that's how we look at that particular point, and that's what we're looking for. That's the idea. And to give an example of that there now, I suppose the easiest way is to just give you an example of that. Right here. And so phase 1, phase 2, phase 1, phase 2. Look, we have a doji bar. There it is there. Look what happened from that doji bar. It went up. Why? Because the overall momentum is going up. That's the idea. We're looking for the trend. We have 2 clear cycles. There's a low, high, higher low, higher high, higher low. So what we're looking for is this phase 2 to happen. And if phase 2 comes down, hits its floor, we're looking for one of these 2 bars there. If it happens, we trade it. If it comes back down to here, we're looking for one of these 2 bars here, and then we're looking to trade it. But if it doesn't give us any of those 2 bars at this particular point, I probably wouldn't take it. If it gives us this bar, I would probably stay away from it. But there's loads more about price action that I can go through in massive detail. And I go through it on my boot camp and stuff like that there. So I will be running a boot camp in January. So anyone who wants to jump in on the boot camp in January, just let me know. It will probably start about mid-January. But yeah, there's loads of stuff like that there. And we look at natural gas. Natural gas has been massively sideways. Hasn't really moved anywhere when I move these drones because they expect it to move a little bit quicker than the likes of it has at the moment. So for me, natural gas is one that we just stay away from. Something that we stay away from. It's not interesting. Just go away. So let's have a quick look at cryptos. Let's see what the crypto market has been doing since we last spoke. Okay, and hasn't really gone anywhere. Any gains that I've had, it's sort of just given back. I think the last time we talked, I was 16% up. I'm now 16% up again. So we can see that the market hasn't really moved anywhere on the likes of this. We talked about this descending triangle and it broke out, which it did. It broke out to the upside, but then it's anything gains that it had on the breakout, it has literally come back again. So we have a little bit of a sideways momentum going on here. So if we look at the likes of this at the moment, now can we see any similarities here and what we saw in China? Can we see any similarities here and in the Chinese market here? I'll pull up China. It's pretty similar here, isn't it? Sideways momentum, broke out, and then pulled back. The only difference here is that the Chinese market, it's been sideways here, pop up, sideways here again. These floors are slightly higher, slightly higher. The Chinese market looks like it's turned, whereas Bitcoin doesn't yet. Look, see the floors here? They're slightly getting higher. Whereas if we look at Bitcoin here, this seems to be the floor, or we're working out, is this? We're not sure this is the floor yet. It may even make a lower low and actually start bouncing along here. So this may be the floor. We're not sure yet. We're not sure yet. So forget about this, and then this. Forget about that. Yes, it is slowly in an upward trend, but we're now trying to figure out, is this the bottom of this phase two? So there's the phase two happening. Phase one, phase two. We're now looking, is this the bottom of the phase two? And we have to let price action here tell us. We have to let the market tell us here. Let the structure of it tell us. And this one, the structure is a little more advanced. Look. And it's slowly heading up. Whereas this one hasn't happened yet. We're at the very beginning of this. Now, as a general rule, Bitcoin doesn't mess around here for too long before it takes off in any direction. If we look here, we had a little bit of sidewaysness. It made a lower low, double bottomed, and took off. So we've double bottomed, sidewaysness, and generally we'll get some sort of takeoff, whether it's to the upside or downside. Because of what we have here, would expect it sort of to take off a little bit further. Now, if you go back a little bit further, now I know this is where the structures is very similar to the Chinese one. If you go back out a little further, so look, we have a floor here. Then we have a higher floor, and then we have the third floor. Okay, go back to China. We have the small floor. We have a higher floor, and then this is the third floor. Okay, so if you go back, they look pretty damn similar. It's just the cycles are a bit different, okay, over a period of time. But for me, we need to be looking at this structure here and finding out whether this is going to take off to the upside. Or do we have a little more downward momentum before that happens? Let's have a look at, someone mentioned Cardano. So someone mentioned Cardano, and did anyone take this from the last webinar? We talked about the floor here. We have a descending triangle, and look what happens going to the upside. Hold on, Shane. Now, the order that we talked about putting here didn't actually work. No more money to buy the dip. Is that what you meant, Alexander? Alexander. No more money to buy the dip. Because that's one hell of a dip. But again, look, it's the structure was there. It had consolidated. We had a descending triangle, and it broke to the upside. Now the question is it's now hit a ceiling once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, 8 times, 9 times, and now this is the 10th time. So now when I say ceiling or a floor, there's a ceiling and it's hit it from the top, so there's the floor. So it still works in the same scenario. So now this here, now I'm classing this as a ceiling. So my question at this particular point is this now going to drop to the downside? Do we expect this now, because it's at the ceiling, drop down to there? Gary, I don't want to possibly yes or no. I want to get off the fence. Make a suggestion. Or do you expect that? Or do you expect that to continue going up? And when I say going up, Control Z, and then go up, retest, and take off. Possibly, I hope not. Possibly because it's 88. Carol, nope. Gary, Alexander, nope. David, yes, expected to go up. Jasper, Alexander, up. Yes, up. Okay. Now, a quick question here. Now, ABA is very reactive to news. It's very reactive to news. So, has anything positive come out about ABA over the last 7 days? No, I'm asking you. I don't know the answer to this. I'm asking you guys. When are they paying the staking? Nope, not that I'm aware of. Have they? Okay, so then the next thing then, have they released anything about a software update? So Shane said, yes, it's being used in some new system. Don't know the name. Okay. So ADA is massively reactive to news. So my question is, before we answer whether this is going to pop down to the floor down here, or this is plan B, or whether it's going to pop down and hit plan A, you better get a reading. You better stick it into Google and find out what's happening. Because a quick Google search will give you a better understanding of which plan we're going to have, A or B. Does that make sense? So we've had a little bit of growth here, a little bit of pop to the upside. Plan A is a perfect buy. Well, it is. But so is plan B for that matter. Either of them are good buys. All we need to now find out is this going to be the beginning of the next momentum to the upside? Or is it the same as that's after happening? And it starts making lower lows. Which of them do we expect to happen? Because if we expect to come down and hit here, you could probably take profit in this position, wait for it to go lower, and then buy it again. And that would be you day trading ADA. So make sure you're having a look. Make sure you're having a look on this. And the next webinar I ask you, I want an answer, yes or no, Henry, this is what's going on. So you're able to educate everyone else that's here. Is it a small thing? Is it the first bit of good news for crypto? Is it something that people can jump on the bandwagon? If it's not, so on and so forth. Oh yeah, that's something there. Has Ethereum bounced as well, or is it just ADA? And it hasn't really, has it? It's generally Ethereum and ADA sort of jump in the same direction at the same time. As Matic. Matic is not as linked to ADA as Ethereum, but Matic has been flying, hasn't it? Matic has been the big winner in this sort of crypto downtrend. Matic is the only one that has been taken off and done well. XRP. Matic has loads going on. Shane, I have no idea what that is. If anyone knows that, yeah. I'm getting 12% interest on Matic staking rewards. Well done. That's the keep up the good work. So everyone remember XRP? Remember when everyone and their mother were jumping in on XRP? Look how flat and static this has gone. The court case has really slowed it down, hasn't it? But again, if it comes back down to here, there is a potential level for investments. Now, are there better ones out there? Well, there are better ones out there in the sense that they're paying staking. Their technology seems to be pretty good. The use cases seem to be pretty good. There are better ones at the minute, but moving forward, who knows what will happen. Okay, everyone, it's been an absolute pleasure. Thank you very much. Hope you have a lovely New Year's. And anyone who is not on my webinar tomorrow, I'll see you next year. But if you're on the webinar tomorrow, guys, I'll see you. So anyone who's not and wants to jump in on tomorrow's webinar, reach out to me, whether it's via email, whether it's on the Discord, whether it's anything like that, let me know and I'll speak to you. But everyone, Happy New Year, and I hope you don't get too drunk and enjoy the festive period, okay? Thanks, everyone. Bye-bye.